All right, let's take a quick check of the markets right now. Well, both of the counters are holding up well in the green. Sensex is up about 550 points and Nifty is also above that 22,650 mark. So yes, we are doing well because all the sectoral indices are participating in the recovery process too. Nifty Auto Index with about a percent gain. Nifty IT Index, which was bogged down in the trade in the initial part, has once again staged a comeback and it is eking about 0.5% gains at this point of time. Nifty Pharma Index doing well, 0.4% gain. Nifty Metal Index nearly 2% gains coming in for the Nifty Metal Index too. If you look at the broader end of the markets, good participation coming in. Both the mid cap and small cap indices have given strong gains of about a percent and they are outperforming the headline indices. But with that, let's quickly get on board with a fundamental guest for the show. We have Kranthi Bathini, equity strategist at Wealth Mill Securities. Kranthi, good morning. Let me start that, we are finally seeing a comeback. Now that the Nifty's valuation is below the 5-year average, but what do you make sense of the markets going ahead? Because we have the reciprocal tariffs which can play a hindrance for a meaningful recovery.
Lovisha, good morning to you. Yeah, Indian market seems to be, we are trying to climb the wall of worries again. 22,500 Nifty as we come out of that range, and right now we are slowly marching ahead of all the resistance levels in technical terms that can create some kind of momentum thanks to the domestic macros, the improvement in terms of the tax revenues and cooling of the inflation. These are giving some kind of booster and positive sentiment for Indian markets in the medium to short term. But still, global cues and the global worries, the Trump trade worries have been weighing on Indian markets. In the Asian market segments are concerned, Asian markets are positive when compared to all the global cues. But in the Asian market cues, we can see complete outperformance of China, and also the Indian markets are right now following the suit. So we can see some kind of positivities coming back in terms of the Indian markets are concerned. When we interact with the global investors across the globe, even though some medium to short term there is a kind of some kind of inconvenience for them in terms of the valuations or vis-a-vis when they compare with the valuations of China is concerned. Medium to short term, the recent changes that made by the Chinese administration in terms of the boosting the consumer sentiment, encouraging the tech, the DeepSeek, given the complete tech rally in China, and also the recent measures taken by the Chinese government in terms of the consumer sentiment and investor sentiment, and also the industrial entrepreneurial sentiment are concerned. The measures what they taken have really giving some kind of a emphasis towards the Chinese market for the foreign portfolio investors are concerned. But still, the long-term worries are still there for India in terms of their long-term growth and also the policy obscurity is concerned. Whereas India have the edge on these points in terms of the policy continuity, long-term growth story, and also the policy transparency and continuity is concerned. So in terms of the long-term is concerned, definitely India have the edge on China. That's where we can see some kind of a heightened activity in the coming days once we resume the strong growth. Right now, investors have been waiting for the strong growth indicators. That's where missing because of the recent softening of these strong growth indicators have creating some kind of skittishness in terms of the investments are concerned. But the recent correction given some kind of softening of the valuations also, what we witnessed is some kind of a froth has been that has flushed out of the system right now. Right now from here onwards, if we can, market could able to withstand the level of 22,750 on Nifty, we can see some kind of 23,000 level. 23,000 level is a crucial inflection point in terms of the sentiment of the market is concerned. If we could able to sustain 23,000 levels, we can see some kind of a heightened activity back in Indian markets are concerned in the medium to short term.
Okay, all right. Kranti, like you were talking about the Chinese stimulus measures, I want to understand from the FI's perspective because on one hand we have the US markets which has turned very expensive, but now that we have seen that the dollar is cooling off and it has reached above that 103 levels for US dollar index. So what does it mean for FIs? Because on one hand we have the tariff uncertainty which is playing out between US and China. On the other hand, we have China announcing the stimulus measures, and on the other hand, we have India with about 15% correction from the highs. So where do FIs actually stand at this juncture, and what does it mean?
Uh, Lovisha, in the medium to short term,
Yeah.
the foreign portfolio investors who are in tactical and also looking for the medium term investment strategy or the trading strategy is concerned, without any hesitation, they are looking for investing in China in a medium to short term because of the relative valuations are concerned. But in terms of the long only funds are concerned, they are quite bullish with respect to Indian markets. As I mentioned to you, the points in terms of the policy transparency, in terms of the policy continuity, and long-term growth prospects. These are the key points where India have an edge when compared to the Chinese markets are concerned in terms of the long-term prospects are waived with the Chinese markets are concerned. So, for Indian markets are concerned, foreign portfolio investors, they're quite bullish with respect to the long-term prospects. But what they're trying to do in a medium to short term is they're going to be on a wait and watch mode at this point of time. But given the kind of the macro improvement of Indian markets, the tax revenues, and also the RBI's prompt action, also giving some kind of comfort in the medium to short term for the foreign portfolio investors. They are in a wait and watch mode in terms of moving their coins at this point of time towards the Indian market. But my sense is definitely on a longer term basis, there would be a complete reversal of what we witnessed the exodus of funds from Indian markets in the last few months and last few days. We can see some kind of reversal at some point of time going ahead.
Okay, all right. Kranti, they have been also bogged down because India's earnings season has been quite subdued. So, from Q4 is going to start soon from April onwards. What do you expect? Can we expect at least a sign of certain recovery from India from Q4? And what is the overall FY26, peg out to be? But let's start with Q4 at least.
Yeah, Lovisha, Q3 was concerned, it's a little bit subdued. We can't
Yeah.
see any kind of earning surprises. At the same point of time, we have not witnessed any kind of negative surprises. At the same point of time, when we interact with the managements in India, they're quite positive and sanguine about the coming quarters and coming prospects of the in terms of their expansions, in terms of their revenues and margins improvement in the coming quarters. So that's where India is gaining the edge. Okay, we have witnessed some kind of softening of the earnings in the medium to short term, but Q3 sense of some kind of recovery we can expect, but still we crossed our fingers to observe because the recovery everybody anticipated in the Q3, but Q4 right now we are watching, but definitely there can be improvement despite of the global headwinds in the medium to short term. But definitely Q4 can be a better quarter when compared to the Q3 is concerned.
Okay, all right. Okay, Kranti, right now the consensus in the market remains to buy banks at this time. But what is your take? Because we have NIMS which is under pressure and even the credit growth is quite lagging. So do you still believe that the sector has got what it takes to lead the overall market recovery too?
Lovisha, one thing is in terms of the India's long-term theme is concerned. So banking and financial services sector for India is one of the key sector for in terms of the long-term investing is concerned. When we resume the strength in terms of the growth, what we are weighing and also the doubling of GDP, that's what the template the government is carrying. If that theme has to be there, banking and financial services are going to take a big advantage of this theme. And banking and financial services are pursued as center of epicenter of the growth. So if the investor is a long-term investor, definitely recent consolidation in these stocks can be a very good opportunity in terms of the large cap private sector or large cap public sector banks are concerned, one can invest. This is a purely a long-term perspective, but medium to short term, the mentioned points and parameters going to weigh in the medium to short term. But in terms of the long-term credit growth is concerned, definitely, since the interest rates have inflation has been softening and interest rates have been in a we entered into the first rate cut, and also if the same rate cut cycle is going to continued in the coming monetary policies, definitely banking and financial services going to take the much benefit from this interest rate cuts cycle is concerned at this point of time.
Okay. Just one last question before we let you go, Kranthi, because we have the Fed outcome which is coming in tomorrow, and the consensus still remains that they're expected to hold rates steady this time too. But on an average, what do you expect Fed to do this year? How many rate cuts are you expecting on an overall for at least 2025?
Lovisha, it's a $1 million question at this point of time. All the analysts in US are trying to gauge these numbers. The mood of Fed action has been crucial for the global markets, but the recent consumer sentiment and also the indicative inflation rise with respect to the tariffs are concerned, that has been weighing on US markets. See, the entire bargain of this tariff and negotiations are concerned, it's going to weigh on the consumer sentiment, and also US consumer is the ultimate beneficiary, or is the US consumer is the victim of this tariff war? That's the bigger question, because when this kind of tariff war goes on for weeks and months, there will be unintended consequences. One of the key unintended consequences, outcome of the key unintended consequences are, one thing is the price inflation. So the job inflation and price inflation can go up in US. That can hurt the interest rate cutting cycle of Federal Reserve. So I believe Jerome Powell will be maintaining the interest rates in a status quo. I get surprised if there is any surprising rate cut. But at this point of time, because there is a lot of sense of obscurity, and also the inflation worries are high at a larger extent, Federal Reserve going to take a stance of maintaining the interest rates, key interest rate parameters. They're going to maintain a status quo in the medium to short term. But I don't think so. They are in a hurry to jump and cut the interest rates in US is concerned. But in terms of India is concerned, I have a different opinion in terms of the interest rates reduction is concerned. RBI can go ahead of reduction of interest rates as inflation is entering into a comfortable level.
Okay. But Kranthi, just one thing that, now that we have certain inflation fears in US too, given the trade war concerns are rising up, do you believe that there could be certain spillover to India as well?
Definitely, because it's a global rot that's getting created. So we can't hide from this tariff wars. Some kind of impact and some kind of sentimental impact and global cues impact would be there. But in terms of the earnings are concerned, it can be very much stock specific. It can be very much sector specific. But in terms of the global sentiment and global cues are concerned, definitely we have our pie of weightage on India in terms of their this tariff is concerned, the sentiment is concerned. But as far India is concerned, I don't think so. Trump administration is in a hurry to impose any kind of unwanted tariffs are concerned. End of the day, tariffs are beneficial for both the countries. It can be bilateral. It cannot be unilateral. At some point of time, they can sit on a table and negotiate for the mutual benefit of the both the countries. I don't think so. In a hurry, Trump administration is going to impose any kind of tariffs on India. The main impact, what we are witnessing, they started with China. They're right now a little bit softening on China, and they want to go on Mexico, Canada, and now on Europe. So the spillover effect is there right now, but I don't think so in a hurry, because the victim of this entire bargain in the medium to short time is U.S. consumer, which can reignite the inflation in U.S. So I don't think so. The statements have been quite strong, but implementation can be in a phased manner and at a negotiated manner.
That's right. He's on a negotiation spree at this point of time, Kranthi. But with that, we have to let you go, Kranthi. But thank you so much for your time and hope that we connect with you soon.
Thank you. Always my pleasure, Lovisha, to share my views with you.
Thank you. Thank you. All right, let's take a quick check of the markets at this point of time. Well, we are still in the green, definitely, and strong in the green, as I say. Sensex is up about 550 points. Nifty is above that 22,650 mark. We are slowly, treading towards 22,700. But let's hope whether or not, and we'll see whether or not we can cross that level too. But with that, we've come to an end of this edition of the Opening Bell. Don't forget to tune in at 3:30 for Closing Bell. We have another market guest where we can discuss about how the market is developed and what the stocks were in focus. Until then, signing off.